Hello and welcome to the day ahead. It is Monday, March the 23rd. I'm Andrew Gagan. Well, the local market is set to open the week sharply lower, with ASX futures down 1.8%, having already lost close to 8.5% since the Middle East conflict began. This follows a very negative session on global markets on Friday as more energy infrastructure came under attack in the Middle East war. Over the weekend, President Trump warning that Iranian power plants would be obliterated if the country did not fully open the Strait of Hormuz within 48 hours. Reports that the Pentagon was preparing to deploy ground forces into Iran added to the sell-off on Wall Street on Friday. All three major indices recording their fourth straight week of losses and below their 200-day moving averages, while the CBOE Volatility Index jumped, reflecting rising fear among investors. Well, the most valuable companies led the losses, including Nvidia, while Meta and Microsoft Alphabet also falling. Supermicro Computer tumbled more than 30% after three people associated with the AI server maker were charged with smuggling at least $2.5 billion of AI technology to China. That saw rival Dell, benefit. FedEx issued upbeat forecasts and said global demand was holding steady despite geopolitical tensions. And shares in the precious metal miners fell further, tracking gold and silver prices lower on concerns of higher oil prices, inflation and elevated interest rates. Well, Iran has vowed to strike the energy and water systems of its Gulf neighbours in retaliation if President Trump follows through with a threat to hit Iran's electricity grid. In a post to social media on Sunday, President Trump said if Iran doesn't fully open without threat the Strait of Hormuz within 48 hours from this exact point in time, the United States will hit and obliterate their various power plants, starting with the biggest one first. Well, this comes as the US military is set to deploy thousands more combat personnel to the Middle East. And the war has prompted a radical reversal of central bank policy forecasts, with markets now pricing in 7 basis points of hikes for the Fed's final meeting of the year. The European Central Bank has also seen a hawkish shift, with fully pricing in multiple hikes this year, while the Bank of England has seen the implied rate lift by roughly 20 basis points by the end of the year. And RBA pricing has also shifted higher, but more modestly, with the final 2026 meeting up around 10 basis points. Well, the US 2-year Treasury yield rose to 3.9% on Friday, while the 10-year was up to 4.38%. Australian 3-year government bond yields rose to 4.9%. The 10-year has touched 5.18%. Markets pricing in an 80% chance the RBA cash rate will be hiked by 25 basis points at the next meeting on May 5th. The US dollar index closed up around 0.5% on Friday. The Aussie is currently at 70 US cents. Well, the International Energy Agency has warned that the war represents the greatest global energy security threat in history, with oil and gas infrastructure likely to take 6 months or more to return to operation. Iranian attacks have effectively closed the Strait of Hormuz and sent European gas prices surging as much as 35% last week. Meanwhile, oil prices jumped on Friday and settled at nearly their highest level in 4 years. Brent futures for May settling up more than 3% to $112 a barrel. Gold is down more than 3.5%, pressured by the US dollar strength and concerns of higher oil prices, inflation and interest rates. Spot gold at around $4,490 an ounce. Copper fell more than 1.5%. Iron ore rose close to 1% to $111 a ton. And Bitcoin has fallen to under $68,000. Ahead locally, it's quiet to begin the week. On Wednesday, we get February inflation data. Overseas, Japan inflation data is released tomorrow, as well as fourth quarter US non-farm productivity. Wednesday sees US fourth quarter current account and UK inflation data. Thursday, US jobless claims. And on Friday, China's fourth quarter balance of payments and UK retail sales for February. That is your week ahead. We'll see you again tomorrow.